So the trade of the day so far, we've only had one trade come in, or one trade signal. It was the blue ball right here. Let's evaluate that blue ball. The trend has been down pretty much all day long, as indicated by the long-term moving average. Okay, it's blue. Blue means down. So the trend has really been down. We had a large price drop. We know that that price drop can do one of two things: either recover or continue going down. 5-10 minutes, there was a lot of indecision by that doji and that pin bar. Now the pin bar tested up. So we had a big pin bar test, okay? Testing up, it was rejected. Then we had a blue ball right here. So these are the two things that indicate a trade signal. However, even though we had a strong trend, we did not have a strong pullback, okay? There was a large price drop, so I would have to subtract 3 off of the management component, dealing with the retracement. The cloudy stop was probably okay, but there was really no room for target profit. So I would probably subtract maybe 2 off of the target profit. That makes this a 55% trade. Oops, I wrote 50%. I didn't mean to do that. It's a 55% trade, all right, according to the rules. When I land on a 55% trade, I look at it a little bit further and I say, maybe I actually want to subtract 4 from that retracement and maybe 2. Make it a 54% trade. And then I may say, as a new person, I don't want that trade. We don't know. We have to struggle with that trade a little bit. There wasn't a nice pullback. There wasn't room for target profit. All right? So it's not as good of a trade as we would like. We know that just the trend and the ball is a 50% trade. And if we took these all day long, this would be a 50% trade. In the batch of all of the other trades that are risky. And then we look at the fact that we're at the bottom of the mark here with 2 different rejections. And we know that this is really, if we look at this trade independently through years and years and years of experience, we know this is only about a 45% trade. So we would have to set our risk management a little differently. I took the trade and I won half a point, I think. But we would want to set our risk management differently because we know it's not that strong of a trade. There's a difference between pooling your trades. If you just said every single time I'm going to see a line with a ball, I know it's a 50% trade. But that's pooled in with all the other trades. Years of experience tells me that's a 45% trade at a G4S3. So a G4S3 on that trade is not very appropriate. Now, it just so happens that the trade has gone good for, it looks like a G4S3, or it's going good for a G4S3 at this point. That still doesn't make up for the fact that this, if you look at it as ball with a trend, is a 50-50. If you have years of experience, this is a 45% trade. Okay. The only reason this was a 45% trade is not because we're not confident that it will go down, but we're not confident that it won't retrace first before it does go down. So it'll either retrace or change directions first. So it's that retracement component that makes it a 45% trade.
This has been another Delta Trading Group Trade of the Day. If you would like to join us for a live trading session, go to our website and enter your name, email address, and phone number, and click Visit Us. We look forward to seeing you soon.